Hey traders, checking into the stock market today. A lot happened since our last video. We had after hours shenanigans with bears showing up, a big time drop at the market open today, but bulls are playing defense. There was a bounce out there. Let's see what is needed for offense. So a quick checkup, as I'm sure most of you know, after hours yesterday, we had Snap coming out saying that they were anticipating that future guidance would be missed because of the deteriorating macro environment, blah, blah, blah. That's the candle that was the result of it. And at first I was like, why in the world is the market dropping because of Snap? But then I saw that Facebook and Google were reacting. And Facebook and Google are something like the number 4 and number 6 largest holdings in QQQ. So certainly major impact there. And that led to weakness overnight. And then we opened this morning. And first thing, we get a ton of weakness. And by a ton of weakness, I mean a free fall waterfall drop. One of the drops where RSI goes out the window, doesn't mean a thing. And we ended up bouncing eventually. And you can see the broader market here had a pretty solid bounce. We did see a new high of the day in the S&P 500. So what that is giving us, looking at SPY is giving us a daily candle that is a bullish candle with a lower wick. So again, playing defense. What is needed for offense? I need SPY to break 397.73, but these days I care much less about SPY, and I care much more about the Nasdaq, because in my opinion, the Nasdaq is going to be the key behind any bounce. And I know I've said it many times, but we're going to say it one more time. The last time we had a meaningful market bounce, it was led by the Nasdaq, and our chart of QQQ divided by SPY shows us that. It was right here, with QQQ leading the way on the bounce, and ever since then, every single bounce attempt of QQQ trying to be the leader has failed and seen a lot of weakness. And look at yet again today, we're starting to accelerate to the downside. So it was very notable today that, again, we have our two sides here where we can put tech, semiconductors, and growth on one side, financial sector, healthcare, energy, whoever else over here, and it was clearly the tech side that was much weaker on the day. So looking at that drop, QQQ, 5-minute time frame, again, just a waterfall drop, bears in absolute complete control for the morning. It was a nice stair-step signal in the sense that when we broke the pattern of a lower high every 5-minute candle, that was the low of the day. And that bull break happened at 282.92. And then we bounced the rest of the day. Granted, again, not a huge bounce, but certainly opportunity there. I was not interested in bounces. I am interested bearish until bulls prove something to me. But I did put my bull glasses on and say, okay, well, there is a possible scenario here where we see these futures charts form 12-hour higher lows. And if we look at the Nasdaq futures chart on the 6-hour time frame, this is a potential inverse head and shoulders. But again, we would need a green day tomorrow. And if we get it, we're going to be watching for this inverse head and shoulders to try and confirm. There's a downtrending resistance line that we can be keeping an eye on this setup. And it would be something like this, falling wedge-like. So again, these are the kind of things where only if I were going to be a really aggressive bull would I be looking to make bullish entries based on these setups that I'm looking at. But really, it's more so in this current market environment for me to say, all right, don't be as aggressive bearish, and maybe be looking bullish, but at this point in time, it's just me, again, knowing that the bears have complete control still, recognizing that the two weakest days that we've seen, the last 3 days, which are two very weak days, Thursday and, Friday and today, did see notable bounces on both. Complete bear control morning Friday, bounce into the end with OPEX, bounce follow through Monday, complete bear control today, bounce into the end of the day, close near the high of the day. What we also keep seeing is the S&P 500 break resistance. We've seen it multiple times now, but not see any follow through. Why is it not seeing any follow through? Because the Nasdaq is not breaking resistance. So we had the example here where we had all this resistance zone that we broke with zero follow through because the Nasdaq rejected from that resistance zone. And now today we break the high of the day. Are we going to see any follow through? Maybe, but the only way we're going to see follow through is if the Nasdaq can break resistance as well, because the Nasdaq has not broken the high of the day yet. This was the high of regular trading hours. End of the day failed. So again, it's just instance after instance where the Nasdaq is holding back the S&P 500. I just have this analogy, this image in my mind of the Nasdaq or the S&P 500 bulls breaking and saying, all right, let's do this, and looking over their shoulder, and the Nasdaq bulls are just limping along and dead weight. That has to change if we're going to get any bounce follow through. So for QQQ, bulls playing defense, but a lot of work to go on offense. I need a break of this resistance zone in the 293s and 294s, which is still over 2% away. Green day tomorrow will definitely make the rest of the week interesting. That's for sure. Semiconductors. So again, playing defense. NVDA has earnings tomorrow. That's definitely going to have an impact on SMH after hours. I'm not positive if it's after hours. Double check that, but probably. So bulls trying to play defense, but again, lower high every day for 5 days. Inside bar bear break. And just not proving anything for the bulls. Yes, we had some bounce today, but the bounce was just an hourly lower high. And into the end of the day, another hourly lower high. So similar to the Nasdaq, unable to break resistance. And bulls not proving anything. Tesla has remained a lead bear. Lower high every day, 7 days in a row. Certainly followed through under 680 support. We're looking down at 620 as a previous level from 2021, and then 600 psychological. And again, it's a very notable bearish correlation. Tesla divided by QQQ shows us that we have done nothing but weaken. We know QQQ is weaker than the S&P 500, and Tesla is even weaker than QQQ the last few weeks. We're watching for a shift. If there is no shift, it's going to remain weaker. Hourly downtrend clear guide, bears in absolute control, knowing that we can bounce 15% and still just be looking for a daily lower high. We can bounce 20% at this point. So tons of space for a daily lower high next bounce. And again, a weak close. There will come a point in time when I am interested in Tesla. It's just not now. Weekly is not oversold. Daily is only just barely oversold. So not the kind of extreme free fall dump. You can see these little green candles on the way down are keeping that RSI from getting extreme. Financial sector holding on well. So we had the double top to the penny at 34.24. Weakness today. There was a point in time where all of our major sectors were at the low of the day at the same time this morning. It was short-lived because the financial sector bulls found a bottom and then bounced the rest of the day. And they're keeping that daily trend change attempt alive. And actually, I take that back. Well, at this point now, it's a trend change attempt. It's an inverse head and shoulders. 4 hour. So just viewing it like this. If we break 34.24, the double top tomorrow, again, that's another push forward for the S&P 500 to try and get a daily bounce going. But we know tech has to help. Healthcare also looks just fine. I mean, comparatively speaking, daily trend change is on the verge of confirming. And actually, it already did confirm. We just aren't following through yet, only by 10-20 cents. But we're right there. This is the highest close that we have seen. Well, it's tied for the highest close that we've seen in over 2 weeks in the healthcare sector. So that's why the S&P 500 is stronger, because XLF and XLV, the number 2 and number 3 most important sector for me personally, behind tech, are not near our lows. We're near our bounce highs from the last 2 weeks. IWM is weaker. IWM has a lot of exposure to the financial sector and the healthcare sector, but that's not helping it much. And the reason is growth names are still struggling on days like today. If the tech sector is big in red, generally speaking, growth is going to have a hard time going up. And just checking through real quick, ARKK, bear break, losing its base of support and its sideways range. PLTR, bear break. So these growth names with a solid red day today. And for some of them, it's the more convincing red day that we've seen in the last 8 trading days or so. So IWM, again, playing defense. We held the low of Friday, 171.79, but we would need an hourly trend change to the bulls, I would need a break of 178.97 for a notable short-term shift. If that level does not break, the bulls do not prove a thing. Keep it simple with the daily lower highs being our guide. Biotech sector, double top at daily resistance. And here we are knocking on the door, about to break support. We have not done so yet. Well, we did by 2 pennies, but we're right there. Is it going to join the rest of the tech names that have broken their sideways range bearish, fading back towards the lows? Or can bulls save it with a green day tomorrow? That remains to be seen. But one thing I want to point out is I point out these correlation charts that show us relative strength and weakness, who's stronger, who's weaker. You will very often see a pivot from relative strength to relative weakness or vice versa based on a key level. So the biotech sector had been showing us relative strength. If you look at XBI divided by IWM, comparing growth to growth. So we had relative strength from May 12th until yesterday. And look at XBI divided by QQQ, just as a comparison, same deal. Relative strength until yesterday. So what changed yesterday was a very clear double top rejection to the tune of 6 pennies. So what happens when you have that double top rejection? Bulls exit their bounce positions, bears jump in and top fish resistance. And you reject and pull back. So it was literally that point that shifted everything from a bull correlation for a significant amount of time to now a bear correlation as traders react to that price level rejection. So just want to show the inner workings of what leads to correlations changing. It all boils down to, supply and demand of shares. And once that double top rejection took place, supply of shares exceeded demand of shares, and we dropped harder than IWM and QQQ from that resistance rejection. So bulls have to confirm an hourly trend change back in their favor, holding this base. Otherwise, we're looking right back at the fear low, and it's a potential weekly bear flag. If you bounce on the weekly and you do not confirm a daily trend change, it's going to remain a possible bear flag. And that's now what we have there. The dollar still weak. Stair step drop. How many days in a row? 7 days in a row. So bears still in full short-term control. Hourly lower high set. I'm expecting a daily bounce sooner rather than later. We got a 4-hour lower high pattern to be watching. We'll be scouting a daily lower high to be the result of the next bounce. The dollar weakness is not helping the stock market bulls. Well, I won't say that, because look when we topped out May 13th. And we bottomed here May 12th in the financial sector and in healthcare. So I guess you could say it marked the bottom in some sectors. Certainly not tech. But it also marked the bottom in metals, certainly benefiting from that dollar weakness. Bounce follow through. We're going to be watching for daily consolidation when the dollar bounces. We have space for a daily higher low to form, anything above 1807. We got a nice clear 4-hour uptrend as a short-term guide with EMA 12 holding. There's an uptrending resistance line we can be keeping an eye on. Maybe there is on silver. I'd keep an eye on that. Potential rising wedges. These are not great drawings. It's better on silver. Is the dollar a falling wedge is the question. I don't know. I haven't tried to draw one. I'm sure we could. Yep. That's a falling wedge. So if the dollar breaks a falling wedge bullish to get its daily bounce going, we're watching silver to potentially be a 4-hour rising wedge. So bull break today, not much follow through, still clearly holding a 4-hour uptrend, so no red flags. Again, this is me saying, oh, bulls are in full control of the bounce. Well, let me put on my bear glasses and see what should I be cautious of. And it would be being cautious of daily consolidation when the dollar bounces, keeping an eye out for a rising wedge as the dollar looks for a falling wedge. Miners, Bounce follow through here as well. A little bit better of a day for these miners because of obviously the metals bouncing and seeing follow through and strength, but also because of the bounce the second half of the day in the stock market. But same deal here. We're watching the hourly uptrend. You can definitely draw an uptrending resistance line where the breaks are not getting a whole lot of follow through. Uptrending support line. But silver is the most clear. I like silver and the dollar the best for those wedges. CCJ, just want to highlight this uranium name because it is bouncing notably as well. We're almost up 20%. We did see a 20% bounce from the lows. And just an example of being in a monthly uptrend, looking for a monthly higher low, and seeing daily oversold conditions leading to a nice bounce. I certainly didn't have confidence enough to attempt that bounce because of the broader market, but following those general rules of when it's a good time to be looking for a longer term time frame higher low when a shorter term time frame is oversold, just like, I mean, technically it was a back burner play where we had a bull move of almost 100%, and that was first daily oversold conditions, and the last time we saw daily oversold conditions was our last monthly higher low. So just like we look for after a significant bull move, first hourly oversold as we scout daily higher lows, it's the same thing, but just different time frames. And if we were in a stronger market environment, I would have been all over that, but definitely more cautious and patient as a bull with where the broader market stands. So that is where we stand. Not much to update on natural gas and oil. Bulls still holding on. A little bit of consolidation taking place. What else? That's about it. Keeping an eye out on those wedges for the dollar and the metals. And recognizing bulls buying dips and playing defense, but also recognizing the tech sector is still way too weak for the broader market to see any kind of meaningful bounce. The bulls have to turn around and go on offense if something is going to change in the short term. Appreciate you watching. I hope you are well. I'm out of content, I think. So we'll recycle something.